Everybody, Happy New Year, and I hope that all of you had a great holiday season. I took a couple of weeks off to review a lot of stuff, think about new things that we could do in the coming year, and also to basically get back into my own space. The people who have followed my blogs on a regular basis know that I've started to refurbish my office about 6 months ago. Ran into a lot of trouble, a lot of issues, but we're now almost there. The reason that I'm wearing a headphone and not using my mic is that the space here is still a bit hollow, so the sound comes out really, as if you're standing in an empty house, which is basically what I am in. But anyway, let's start with some new plans. So the first plan is that, and you may have seen it, I wrote a new blog article which is called the best 5 sectors, number one. And the reason it's number one because I'm planning to actually make 52. The idea is to make this a weekly event and pick the best 5 sectors based on RRG metrics on a weekly basis, and then track the performance, obviously, of those picks, and see if we can find a repeatable set of trading rules, I think is the best word to describe it. The rationale behind it is not fully disclosed for many reasons, and it's also still work in progress. So for me, this is V1. This is version 1. I'll tell you when the background changes and what the changes are. But for now, it's a strategy, if you wish, that looks at weekly and daily RRGs, weekly and daily RRG metrics, which is essentially what I always do when I talk to you in these videos. We look at weekly RRGs and sometimes we bring in the dailies for a little bit more color, a little bit more detail. And I've sort of brought that into it's not a hard-coded formula, but there are some rules there that I use to come up with the best 5 sectors. So every week we'll look at the best 5 sectors. I've done a lot of testing on that, and I one of the next few weeks I'll show you some of the backtest results, signal results based on this approach. It's decent, otherwise I would not have started this experiment. And it also what it also is not changing every week. So you will notice that from week to week, it will not swing into a completely different set of sectors. As a matter of fact, from my historical results, the changes are actually not too high. There are not too many trades, if you wish, using this methodology. But it gives us a good platform, a good base to start from and look at the best 5 sectors on a weekly basis and go from there. And that's exactly what I want to do in this first video for the new year. We're going to look at the article, the best 5 sectors, and then we see that the best 5 sectors here are XLY, XLC, XLF, XLK, and XLI: discretionary, communication services, financials, technology, and industrials. And my idea now is, I'm not sure how I'm going to, if I can keep up with that, but my plan now is to every week in this video dive into one, maybe two of those best 5 sectors and look at the individual stocks in those sectors or the individual groups and see if we can sort of go one layer deeper into the analysis of the individual stocks or groups inside one or two of those best 5 sectors, and give some color, give some granular detail on individual investment opportunities there. Let's start with a quick look at the sectors that we've picked for this week. And I've got the weekly RRG here on the right and the price chart on the weekly RRG on the left and the price chart on the right. So the first sector that we're looking at is XLY. And if you look at the price chart, it's pretty clear why this is a good sector. We broke out a couple of months ago, and we're still holding up in that uptrend, and relative strength is still going very, very well. The RS ratio is still moving higher. RS momentum as well, although it's slightly tapering off right now. But this is a very good price trend as well as a relative. So this is the tail here. So the second sector that we're going to look at is communication services, XLC. Let me bring up that sector on the price chart. And again, we can see how this price chart is doing really well. We broke out of the already rising trend, accelerated, and we recently dropped back. And now that old resistance line is coming back as support. It's holding up well so far, and we're pushing higher off of that old resistance, now support. And if we look at the relative strength, we can see how that broke out of a range, is continuing higher, and that's leading to both the RS ratio and the RS momentum line to move higher. RS momentum is now leveling off, but RS ratio is still doing pretty well. The third sector is financials, the financial sector. And you can see how that's rolling over inside the leading quadrant. It's still one of the stronger sectors, especially when you combine it with the daily, which is what this technology actually does. So if we bring in that price chart for XLF, you can see how this rhythm of higher highs and higher lows is still in place. We're holding, let me put my cursor right here, around 40, 48, around 48. That seems to be the newly formed support level. We could sort of visually create a diagonal rising support line here as well, but I'm going to keep an eye on 48 as kind of support in the near term. If you look at relative strength, we broke out of that trading range, but it looks as if we're dropping back into it right now, and you can see how the RRG lines have stabilized. RS momentum is rolling over, almost crossing over below 100. That's what you see right here in the RRG. That's where the tail is moving from leading into weakening. Doesn't make it a bad sector immediately. As you know, everything on the right-hand side is still in a relative uptrend. It just means that this uptrend for relative strength is losing some of its power. Now, the fourth sector is technology. And I need to highlight that right here. That's inside the improving quadrant and really started to pick up. If you look at the stability of that tail over the last weeks, remember, this is a 5-week tail. And for 4 observations, we were almost on a surplus. And now all of a sudden we jump. So that underscores the improvement for the technology sector very recently. If we bring that to the price chart, then we can see how XLK is still struggling with overhead resistance. I'm going to say around 240, in the 240 area. It's still inside the rising channel, so that's the good news, but it's having trouble with that overhead resistance around 240. If, and only if, that breaks and gives way, then we have an all new situation and we will very likely see an acceleration of the technology sector higher. But even if it doesn't manage to break higher, there is still plenty of room inside this rising channel for XLK to sort of, move sideways, move slightly lower without damaging the chart too much. So technology is really back in the game, I would say, if it ever left. Well, it did really leave here, but we're now picking up again, and you can see how the RRG lines are now fighting to come back. RS momentum is already above 100. That's why it's inside the improving quadrant. And RS ratio is following suit. And if that momentum move continues, I expect the RS ratio line to actually cross above 100 in the next couple of weeks. But we will see that in the RRG when it happens. And the last sector of the best 5 is the industrial sector. And it's inside the lagging quadrant. It's moving inside the lagging quadrant. So if you look at this tail, it's actually not a very good sector. However, the problem is that if you want to do the best 5 sectors, you need to pick the best 5. And it looks as if industrials is the best of the weakest, because all these red sectors are definitely not very good. They're not in a very good shape. Let me quickly move this to a daily RRG, and we may see the differences between the tails of those sectors. And here you see the movements. Let me highlight. So we had consumer discretionary, we had technology, we had communication services, we had industrials, and we have where's financials? Financials right here. So these are the 5 sectors, but now we're on a daily scale. You can see how XLI is actually now picking up, as well as XLF, communication services, and now you see that XLK and XLY are actually the ones that are dropping in terms of momentum. The combination of the two, the combination of the weekly and the daily, makes them the best 5, and so the pickup of that daily tail for industrials is the cause that really weak weekly picture is causing the industrial sector to drop out of the best 5. It is, however, the number 5 in the list. So maybe that's another thing that I should tell you. If you look at, or if I talk about the best 5, the list is from best to worst. So the number 1, consumer discretionary, is actually the best, and industrials is the number 5 on the list. So if in coming weeks, at some stage, I don't know, we're gonna see what happens. Industrials drops off. It is very well possible that out of these 5, industrials drops off and a new one comes in, and the other 4 remain where they are. But that's a little bit. You will see what happens over the next couple of weeks when we follow this system a little better. But number 1 is the best, and number 5 is the weakest, is the worst of the best 5. Does it make sense? I hope so. Anyway, this is the 5 sectors and how they are situated on the RRG. When we go into the members of the consumer discretionary sector, I've loaded up the members on the left-hand side on the RRG, and then I can bring up the price chart on the right-hand side. So here we have the first tail that we're looking at is Amazon, and you can see how that is positioned inside the improving quadrant. It's a very short tail, so there's not a lot of power, not a lot of relative power behind that move yet, but it's very close to crossing over into the leading quadrant. And if we look at the price chart, we can see how there is a very steep price uptrend, which is obviously supportive. And we can see how relative strength is kind of coming out of the doldrums, coming out of a sort of sideways move that started back in July, and we're about to come out of it. And you can see the result in the rising RRG lines that are now almost both above 100, making Amazon definitely one of the stocks inside consumer discretionary to keep an eye on. We go over the other ones. So here, CMG, I'm just going through the tails, and I'll stop at the ones that I find interesting enough to bring up a price chart. So here, ULTA, maybe. Let's look at ULTA. So here is ULTA. And I can see why that pops up. It's actually quite interesting because looks like we're completing a double bottom, or at least a bottom-ish formation, kind of a sideways move here. If we take out that 447, 450 area, that'll give it a little bit more swing to the upside. And you can see how relative strength is bottoming out, and that is translated into RRG lines that are now getting closer to crossing over into the leading quadrant. So the momentum line is already above 100. That's why ULTA is inside the improving quadrant. And if that momentum move continues, you will find the RS ratio line to follow and push ULTA into the leading quadrant whenever that happens. So here, KMX. This is the relative strength improved, but I'm not super stoked yet because RS ratio is not doing anything, and that's why this is a almost vertical move. You saw that ULTA had a little bit of that twist to the right where it was picking up relative strength. That's not the case for CarMax yet. And also the price chart seems stuck in a range, slightly higher lows, but the overhead resistance here, and that is around $90, a little lower, between $85 and $90, is actually is quite strong. That's a serious overhead resistance level. If that breaks, the story changes. But right now, I wouldn't be too overexcited for CarMax yet. No, so here, this is the one that stands out, BBWI. Let me see what that does here. And I can see why that stands out there because of that momentum move coming out of that relative bottom here. Big gap. That's why the follow through came. But the problem, my problem here, is that we're running into resistance, and this seems to be a pretty serious resistance level with a bit of a topish pattern here. So the next couple of weeks, I wouldn't be surprised if we're going to close this gap or at least try. And then the momentum here is leveling off. You can see how that tail is starting to level off, making it harder to push all the way to the right because you do need a lot of momentum, a lot of relative momentum to actually push into that leading quadrant. If you're already coming into that leading quadrant, while you lose momentum is usually not the strongest of signs. Here, Etsy might be an interesting stock because this one is actually also starting to move to the right. And if you look at the price chart here, you can see how this is coming out of a very long downtrend. This traded around 300 bucks. It's now 56. So the history suggests there's a lot of upside. And if you look at the price chart here, you can see that we kind of started to bottom out somewhere around August. Found its support here around 48, and the resistance area I would say is around 60, 65. If we can kind of get out of this, we're turning around a really long-term downtrend into a new uptrend. That's always a very interesting situation, especially if a stock has traded that high and you come out of a long range, got a big base, usually got a lot of upside potential. And the same goes for the relative strength of Etsy, which has been under pressure for, well, I mean, if you start here, it's 2023. If you start here, it's 2021, with a little upside here halfway through 22. But without a doubt, this has been under pressure, and it looks as if we're now starting to pick up some relative strength here. I would definitely keep an eye on this because I like the stocks that have been pushed down and then starting to form a base, and then both in terms of price and in terms of relative start to pick up again. That's usually a pretty good situation. At least it's low risk because you're not buying at the highest level. This here we get into the red lines, into the weak and the lagging quadrant, and you can see all these tails. Some of them are picking up a little bit, but that's too early to my taste, at least. Look at that Airbnb tail rotating, rolling back into the lagging quadrant. Not very good. Yeah. Forward. A lot of bad stuff in there. This looks nice, but it's the lowest reading on the RS ratio scale, so not on my list for the time being. And here we go into the weakening quadrant, and these are rolling over, so not interested here. These are all rolling over. Cruise lines I know that they were pretty good, so let's have a look here at CCL. Still okay-ish, but you can see the problem here. You can see why it's rolling over into the weakening quadrant because it's losing relative strength. So we had that run up, supported by that nice run in price. But after that break here above 20, this we ran into resistance into that 27 area. So it looks a little bit toppy. I think it looks like CCL needs a bit of a pause, and that's why it's rolling over and pushing into the weakening quadrant and losing some of its relative strength right now. And here, Garmin rolling over. I want to go to the nice green one. So here's our L. Willow Ralph Lauren. Look at that. That is a nice one. So we're breaking out to new highs here. That explains that hook here. And we're breaking out in terms of relative strength as well. So this is actually a really nice stock, RL, Ralph Lauren, inside Consumer Discretionary. Breaking out to new highs. Looks like a very steep ascending triangle. Same in terms of relative strength and RG lines picking back up and actually making a rotating back into the leading quadrant after only 1 week of a dip. It's a really fast turn here. So this is actually a pretty good stock inside consumer discretionary sector. And then we have Lulu. Uh, yeah, same problem as we had with a few of those others. It's a very long rally, pickup of relative strength, but now losing relative momentum, and that's why we're seeing that rolling over in the tail, making it a little harder for the near future. It's still a pretty good stock. If you look at that price chart, a little bit of a consolidation. If we manage to put in a higher low and push higher, that'll definitely start supporting the relative strength again, and then we will see that RS momentum line curl back up again and push it further into the leading quadrant. So Lulu, RL, definitely good stocks. ADSI, definitely good. ULTA as well. See what else have we got here. So we got TPR. That is another one that is probably good because it's pretty stable. Yep. So maybe not to chase it, but if it's in a portfolio, definitely hold it because it's a really nice steep rally. It's pushing relative strength higher. We're getting into the area of the all-time high in terms of relative strength. If that breaks, that's a new sign. It's a new addition to the good points for TPR, and you can see how the RRG lines are pushing higher. Stable RS ratio, stable momentum, continuing to push that RS ratio level higher, and that's why you get that kind of horizontal move on the RRG. Slowly but gradually moving higher on that RS ratio scale. And then finally, the big one here in this sector, that's Tesla, obviously. Strong chart, we see a setback again. It looks as if we're now trying to test the all-time high area between, this is pretty rough, but this is like 385, between 385 and let's say 400. That's a pretty serious old resistance now support area for Tesla. If we put in a new low, if last week's low was a higher low, that would be pretty good. And we would be able to see a continuation of that uptrend. And we will definitely then see that continuing with the relative strength improvement. We took out this overhead resistance level here. Kind of stable. We lose a little bit of momentum. That's why you see that tail rolling over. But inside and in the scope of things here for the consumer discretionary sector, Tesla is still the strongest stock inside this sector. Now, final word on the behavior of this sector. You see a lot of tails inside the lagging quadrant. We know why that is. That we know that that's because of the heavy weights like Tesla and Amazon that are dragging that sector higher. So if you talk in terms of breadth, it's actually pretty narrow breadth, but price pays, and this sector is going higher, and a few of these stocks are actually doing really well. So despite the narrow breadth, just follow the price, and we will address the breadth problems as soon as they become more serious. That's it for this week. I hope you enjoyed this first episode of the new year. Follow me for new stuff going forward. And also we'll be continuing to address the normal sector rotation, seasonality, monthly charts, all of the stuff that you're used to. It will be back in 2025. For now, thanks again for watching. And I'm looking forward to seeing you again next week, same time, same place.